Hi, shall we start? Welcome to our first morning call in 2024. Today is going to be a relatively short one as the year has just started. Without further ado, I'll pass my time to Glenn to talk about Singapore Banking Monthly.
Hey, thanks, Elena. Yep, so for the banking monthly, we'll be first looking at the interest rates. Okay, so for the interest rates, both the Hong Kong and the Singapore interest rates actually dipped slightly in December. So for the Singapore interest rates, the SORA was 3-month SORA was down 2 basis points month on month to 2.74%. And this is the first decline that we have seen in 11 months. But nonetheless, it was still up by 66 basis points year on year. And December's SORA was actually similar to the fourth quarter 3-month SORA average of 3.74%. So the fourth quarter SORA average is also still higher than the third quarter's average of 3.69%. For the Hong Kong interest rates, it also dipped. It was down 7 basis points month on month to 5.37%. But this is still the second highest level reached in 2023. And it also improved by 8 basis points year on year, and also was 3 basis points higher than the fourth quarter average of 5.34%. So we might be starting to see this slight dip in the interest rates, but I believe that we will still continue to see this elevated rates at these levels for at least the next few months. Now, moving on to the next slide. Yeah, we'll be looking at the loans growth. So the loans growth fell by 2.89% year on year in November to 793 billion. So although this was below our low single digit growth for estimate of a low single digit growth for 2023, it is still the smallest decline recorded in 10 months. So we might see this slight sort of pick back up for the loans growth as the interest rates start to decline slightly. For the business loans, it fell by 4.43% year on year, as the loans to the building and construction segment, which is the single largest business segment, fell by 0.29%. So it's actually quite flat. While the loans to the manufacturing segment fell by 15.7%. So this was probably what made the business loans fall. For the consumer loans, it was also quite flat at it fell by 0.4%, as the dips in the other segment were offset slightly by the strong loan demand in the housing segment. So the housing segment, which actually makes up around 70% of consumer lending, was the only segment that grew, and it grew by 1.4% year on year. So the housing loans have actually been growing for the last year, I guess. And it's the only segment that has been showing this positive growth. For the total deposits and balances, it grew by 4.4% year on year to 1,794 billion. And the current account and savings account proportion, or CASA proportion, it dipped slightly to 18.5%. But it's a very, very slight dip, about 0.2%. So we can see that while the CASA ratio, it's been sort of stagnant at this 18% range, we can see that the deposits and balances have actually grown. So that is a good sign for the banks. Now, for the Hong Kong loans growth, the domestic loans growth declined 4.3% year on year and for 0.46 month on month in November. And the year-on-year decline in November was higher than the decline in October. So now moving on to the SGX statistics. For the preliminary SDAV for December, it was flat year on year at 939 million. And this is the first time that the SDAV did not decline in 5 months, while the DDAV fell 5% year on year and month on month in November. The VIX, which is a market index that measures the implied volatility of the S&P 500 index. So we use this to see the volatility of the market. It averaged 12.7 in December, and this is down from 14 in the previous month. And just to highlight that this is the lowest that the VIX has reached since December 2019. For the top 4 equity index futures turnover, it saw a decline of 3% year on year in December to 10.96 million contracts. This was mainly due to the lower trading volumes of the FTSE China A50, as well as the Nikkei 225 index futures. And notably, the Nikkei 225 index futures actually rose 35.7% month on month. So just some quick banking news highlights that happened in December. Mainly, just three news. I think the main one, it would be that MES did impose this civil penalty of 3.9 million on Credit Suisse, mainly for the failure to prevent or detect misconduct by their relationship managers in the Singapore branch. I think the RMs just provided their clients with inaccurate or incomplete post-trade disclosures. And also the Singapore Police Force as well as MES advised that the remittance of funds into People's Republic of China should be made through channels such as banks and card networks, mainly to prevent any inadvertent freezing of their monies by PRC law enforcement agencies. And lastly, I think it has taken into effect already, which is that the Maybank's CEO, country CEO, has been replaced, and it will be replaced by Alvin Lee. So this was taken into effect in the 1st of January. Yep, so moving on to the next slide. We maintain overweight on the banks and remain positive on banks. So we might see flat growth in the net interest margins for the banks. This is despite the higher for longer interest rate environment. But a recovery in loan growth as well as fee income will uplift the profits for the banks. So that's all I have for the banking sector. I'll now hand it over to Miao Miao. Thank you.
Thank you, Glenn. Some updates for elite commercial REIT. Next slide, please. The elite commercial REIT has announced a fully underwritten and unrenounceable preferential offering of 103 million new units to raise 28 million pounds. For every 1,000 existing units, 214 preferential offering units will be available at an issuing price of 0.27 pounds each, reflecting a 10% discount compared to the per unit weighted average price of 0.3. As of December 18th, 2023, the offering commenced on 2nd January 24 and will conclude on 10th January 24. The theoretical ex-right price calculated based on the price of 0.29 market price stands at 0.286 pence. We recommend subscribing if the share price remains above 0.286. Sunway PhillipCapital intends to subscribe for any excess undertaking units left, maximum 16.1 million, will increase their holding by 9.1% to 14.9%. Next slide, please. We identify some positives. Firstly, as mentioned, it's fully underwritten by the sponsor, CIMB and RHB Bank, thus eliminates the uncertainties. Secondly, roughly 27 million will be used for debt repayment, while the remaining 1 million will cover expense. Following this offering, its leverage ratio is forecasted to decrease from 49.6% as of December 1st, 2023 to 43.5% on a pro forma basis, leading to an increase of debt headroom from 3 million to 58 million, assuming 50% gearing cap. Additionally, a pro forma distributable income for the first 9 months of 2023 is expected to rise by 8.1% from 13.6 million to 14.7 million, primarily due to reduced interest expense. As for the negatives, it has projected a 19.3% expansion in their market cap post the preferential offering. Thus, NAV per share is anticipated to decrease to 0.4 pence from 0.43 pence in December 23. Pro forma distribution will increase to 14.7 million. However, DPU is projected to drop by 11.3% from 2.5 pence to 2.82 pence as the share base enlarged. Yeah, next slide, please. Oh, sorry. Elite is currently trading at FY24 dividend yield of 16%. Potential redevelopment plans such as student accommodation and data center may take place given the enlarged debt headroom of 58 million. Our DDM back target price remain unchanged at 0.36 pence. Yeah. Sorry, next slide, please. Yeah, that's all for Elite. Moving on to Far East Hospitality Trust. Next slide. It's a hospitality REIT with market cap of 1.3 billion. The portfolio has 12 properties, including 9 hotels and 3 service residences. It also has a very unique master lease agreement consists both a fixed rental component and a variable rental component. Variable is calculated by combining 33% of the property gross operating revenue and a specific percentage of the gross operating profit, which varies by property, minus the fixed rent. Yeah, in the case of the calculation of variable component yields a zero value, variable component will be considered to be zero. And next slide, please. We identify 3 investment merits for the REIT. Firstly, is riding on the leisure recovery. SIA aims to reach around 90% of the pre-pandemic flight capacity by March 24, up from 83% in September 23. In third quarter 23, the average daily rate surpassed its pre-COVID level by 5.5%, excluding hotel under government contract will be increased by 26% year-on-year. Revenue per available room for service residents is 22% higher than the pre-pandemic level. As flight capacity normalizes and Chinese traveler returns, hotel RevPAR is expected to achieve 97% of the pre-pandemic level throughout the year. Anticipating a packed MICE schedule, we project a strengthened NPI for service residents, driving DPO growth in 2024. Secondly, as mentioned, is master lease structure to protect the downside. Fixed component alone generated 77% of the total revenue and translated into 4% dividend yield in FY22. This minimizes the potential income risk caused by uncertainty and volatility of the global economic condition. Last but not least is the potential overseas expansion. The divestment of Central Square yielding 1.8% on exit supported an upward trend in DPU for Far East Hospitality Trust. To counter the impact of high interest rate, Far East plans to cushion distribution with 18 million incentive fee, targeting a FY23 dividend yield of 6%. Post-divestment, the risk stands as one of the least geared asset rate with 32% leverage ratio and 3.2 cost of debt, with a debt headroom of 900 million, assuming cap at 50% gearing rate. Far East Hospitality Trust is exploring potential acquisition in Japan, currently deferring equity fundraising. Their focus is on smaller asset, roughly 70 to 80 million. We expect to generate a positive carry of 2%. Yeah, next slide, please. We also identified, we would like to highlight 2 potential risks. Firstly is valuation risk. We do not expect any material change in year-end valuation in the face of resilient demand and elevated RevPAR, despite increasing cap rate. Even assuming a 5% decline in valuation, gearing would only raise by 150 BP to 33.7%. Next is income risk. We approach the second half 2024 outlook with cautious due to potential budget constraint in both corporate and leisure sector, given the muted macroeconomic outlook. Elevated room rates and strong Singapore dollar might divert travelers to other holiday destination in ASEAN countries such as Thailand. The next slide, please. As such, we initiate coverage on Far East Hospitality Trust with a buy recommendation and target price of $0.79. Far East Hospitality Trust is trading at 0.73 times price to NAV, which is below the average S rate of 0.86 times. Our valuation is based on DDM, using cost of equity of 6.5% and 1.5% terminal growth rate. At our target price of 0.79, we value Far East Hospitality Trust at 0.4% FY23 dividend yield. Yeah, that's all for me. I'll now hand over to Zane for technical posting, please.
Thanks, Miao Miao. I'll move on to the technicals. Next slide, please. Yep. So for S&P 500, last week we saw a pullback to retest the recent swing low support close to 4,700. So if that holds, we are likely to see some form of range consolidation going ahead. For now, the immediate resistance is at about 4,740 to about 4,800 area, while the support would lie between 4,600 to about 4,700 area. Next slide. So for ETF monthly for December 2023, we saw that in December, most of the asset classes actually posted positive returns, with Bitcoin being the biggest gainer, gaining up over 10%. What did well was also S&P 500 and also US Treasury bonds as well as Singapore equities gaining about 3 to 5%. The losers were oil as well as Hang Seng Index. Oil was down about 0.03%. Hang Seng was down about 1.5%. In terms of the current trend wise for the various asset classes, most of them are currently still in the uptrend. Namely S&P 500, US Treasury bonds, gold, as well as Bitcoin. Singapore equities are in a bit of a range consolidation currently, and oil and Hang Seng Index currently in downtrend. So for the outlook for this month, we could see potential continued strength in terms of S&P 500 as well as gold. Most of the asset classes could be consolidating for this month, namely the US Treasury bonds, Bitcoin, Singapore equities, as well as Hang Seng Index. And oil could continue a pullback this month. Yeah. Next slide. So diving deeper into the individual ETFs, let's take a look at their respective charts. The first one will be the VOO. So for VOO currently, it's still looking nice. We just had a bit of a pullback starting of last week. So potentially it could hit down a little bit towards the support area of about 418 to 427 if it does do a retest of the previous all-time high level. Next slide. So next one will be the Treasury Bond ETF, IEF. So currently it's trading in this uptrend channel, but as it's quite near the horizontal resistance of about $97 to $98, you could see a little bit of a pullback and consolidation going ahead this month. Next slide. Next, for the gold mini shares trust, GLDM, it's also still trading in an uptrend channel, and just hovering in the range quite near the all-time highs of about $41 to $42. So yeah, we could see a little bit of a range over here for now. Yeah, next slide. And the next one will be the S&P oil and gas exploration production ETF, which actually tracks oil XOP. So currently it's looking a bit more bearish. It's actually trading in this downtrend channel over here, and it's inside the big wedge consolidation. So if you do continue to see a weak momentum, could potentially continue to trade in this downtrend channel in going ahead in this month. Next slide. And for Bitcoin, currently it's still trading in this uptrend channel ever since the break of the downtrend resistance line back in October. So the next resistance level, the next key resistance will possibly be at around $25 over there. So yeah, let's see whether it can go up to those levels if it continues to trade in this uptrend channel. Next slide. The next one will be Singapore Equities ETF, ES3. So for this, generally, when you look at the long term, it's slowly going up in the uptrend channel. But currently, in a shorter time frame wise, it's currently doing a retest of the uptrend support line breakdown, which actually occurred in October of last year. So at around the 3.3 level over there, we had a bit of a pullback last week. Yeah, so we could see a little bit of a range consolidation going ahead, given that 3.4 is also a resistance level last year. Next slide. As for the Hang Seng China Enterprises Index ETF 2828, it's currently trading in a downtrend channel. So we could still see a little bit of a weak momentum going ahead currently, as it's also below the recent support breakdown level of about 60 Hong Kong dollars. Yeah, next slide. Yep, so the next one will be on touch on is the Thai SDR monthly for December 2023. So in December, airports of Thailand gained about 1%, and CPO gained about 7%, while PTT was down about over 1%. Then in terms of their current trend wise, I think airports of Thailand as well as CPO could still do a bit of a range consolidation, while PTT could continue to be in a bit of a downtrend. Then in terms of January wise, we could see some consolidation from all three Thai listed counters to start the year, going into this month. Next slide. Yeah, so for the first one, Airports of Thailand, for December, it held the support area of about 59 over there. It just ranged for a while. Currently, it looks like it's breaking above the range, and it's about 63. It's about 63 baht for now. So the near-term resistance wise could be around 65 if it does retest the previous support level breakdown for Airports of Thailand. Next slide. Next one will be CPO. So currently, for this, in December, after it retested the key support level of about 51, 52 over there, it broke out this downtrend resistance line on the weekly chart, and currently it looks like it's doing a bit of a range for now. So generally could expect a bit of a sideways trading, as there's some resistance around the 56 to 58 baht level over as the near-term resistance. Next slide. As for PTT, after it broke down the key uptrend support line, it's currently trading under this downtrend resistance line, receiving some support around the 140 baht level. So we could still see a bit of a range or towards the downside, possibly, as it still quite bearish on the weekly. Next slide. As for the individual counters, we have technical buy for Alphabet. So for this is at buy at $130.92, a take profit level at $143.70, and second take profit level at $150.60 with stop loss at $136.40. The stop loss goes at $135.73, and this trade actually triggered our stop loss. So the original trade idea was that it did a back test of this consolidation wedge breakout in the chart. Also, this $138 level was actually confirmed with a recent horizontal resistance breakout, which could have acted as a support level. And in general, the counter was also trending upwards with increasing momentum of both MACD and RSI. Next slide. The next counter was MedTech International. So for this is a technical sell, 18.6 cents. Take profit levels at 16.5 cents and 15.6 cents. We have a stop loss at 19.2 cents. The stop loss goes at 18.3 cents on Friday. So for this, I think it's likely to continue its bearish momentum when we look at the chart. After forming an evening star bearish reversal pattern earlier on, actually it consolidated in a bearish pennant for a while. And looks like with a breakdown, it could potentially continue the downtrend, given the declining momentum on the MACD and RSI. So potentially you could see maybe price retrace further towards these two support levels. Next slide. Also, just to sum up the trades initiated, Alphabet hit our stop loss, so it was down about 1.8%, and MedTech is currently running, so it's about 1.6% up as of Friday's close. Yeah, so that's all for me now. I'll pass on my time to Peggy to talk about Phillip on the ground on Katrina. Thank you.
Thank you, Zane. Good morning. I'll kick off with Katrina's Phillip on the ground. We visited the company last Thursday. They show us some of the projects that they are running. The Katrina, if you recall, they are a F&B operator. When they were listed, they had more than 40 outlets, and then they have been shrinking, downsizing that over the years. The COVID years were especially bad for them, so that has with that they actually trimmed down substantially. The market cap now is 6.6 million, a very small number. They now currently owns and operates 8 F&B brands and franchise in 2 Korean brands for casual and mid-range dining. Yeah, they're supposed to be, the brands are listed down there. I think, never mind. Okay. They also runs 70 service apartment units under the ST Residences brand name, and 278 keys for co-living hotels under the ST Signature brands. These hotels and service apartments are located very near to the city fringe and near the MRT. So for Katrina, what we are doing moving forward is to right size the F&B, trend towards the quick service concept and the casual dining. They have since been operating since 1995, but have been facing many challenges. Firstly, the manpower shortage, higher rental, which is common among the F&B operators. But for Katrina, we feel that they face another challenge in the fact that they had a lack of economies of scale. Because for every brand that they own that and operate is only the one or two outlets, so there's no scale. And all these brands offer very distinct cuisines. And for them, most of the restaurants are located at Clarke Quay, and Clarke Quay underwent a redevelopment. The full reopening will only happen in 2024, so their operations were affected. So even for overseas operations, they have closed their Hong Kong. The one remaining outlet in Kolkata will also be closed. Okay, for the franchising brands, Daily Beer and Daily Chicken, these are the Korean brands catering to young crowd, casual and quick service concept. They just beginning to launch Daily Beer last year, and Daily Chicken will be towards middle of this year. And they hope that the new concept will cut manpower demand as they introduce technology solutions. Yeah. So the hospitality is the bright spot for them. It recorded a high occupancy rate of 87%. And they feel a niche segment in the hotel sector. It's targeting at the millennials and digital nomads and the backpackers. The room rates are $80 on up the way to less than 200 for the SC signature. And then for SC residences that are on a higher scale. So we think for Katrina, it's good to watch out for their transformation, especially as turning themselves into a hospitality play. The company is still in a negative net asset. They had recently issued a 1-for-1 bonus warrants and exercise price at 0.02 cents. So most of these warrants has been issued, and likely the exercise will be converted very shortly. So that will bring in about 4.7 million Sing dollars, but still not enough to repair its net asset value. But with the owner Alan Goh and his wife owning 80% of the shares, we think this would be a big push towards the hospitality to turn around the company. Yeah, thanks. That's all for me from Katrina. I move on to the next one. Okay, pause on business trip. So cover the performance for Phillip Absolute 10, the model portfolio in December. Okay, we did well, helped by the FEHT chair, so statement on the possibility of 3 rate cuts next year. So the REITs had a very good rebound, and also for property sector, and so our Propnex had a good December, up 11%. Is similarly also because of the Keppel REITs sprang back to life. So Keppel Corp also gained 6% during the quarter, during the month. Okay, in terms of our monthly breakdown, we are higher than the Sing performance of 5.4%. Next slide, please. Helena. Thanks. So for the whole entire market in the different sector performance, you can tell from the table on the left. Electronics had a good run, led mainly by Franken, and that is with ASML as their key customers. They have been fairly, and ASML is a big equipment supplier for the semicon sector that has benefited the Franken's share price. The other sectors that has done well, of course, is REITs. for the interest rates outlook, for brighter interest rate outlook in this year. In terms of the top gainers, I refer you to the table on the right. The REITs stand out among them, especially the Mapletree REITs. On the loser side, Court Life had a very bad month, of down 30% after they had an issue with in their labs, where we are now facing probably follow-up repercussion from customers as well as insurance potential insurance liability. So those are the losers also for the Singapore SPDR. Actually, there's only Wilmar that's down, the rest are all up, so you can't call them losers as well. Thanks. Move on to the next one. Okay, so in terms of the different asset class, commodities did badly, was the worst performer, in -3% in the month of December, and REITs is up 10.5%. Next slide, please. So for the Philips Singapore Money covering this for this month, for this week, okay, we had a lot of data that came out from the US, but so the signals were quite mixed. But just pull out some specific one for discussion here. For December non-farm payroll, it shows 216,000 jobs being added in the month of December. It's higher than 199,000 for the month of November. And unemployment rate stays fairly low at 3.7%. But if you look further into this unemployment rate number, the labor force has actually also, has fallen. So the denominator is actually it's also been reduced. So it's one thing to note. And out of these 216,000 jobs being added, 77% were added in 3 sectors: the government, education, healthcare, and leisure and hospitality. Typically, these sectors they do not produce goods, so they don't drive production and output, and therefore not something that will add significantly to bring in more new jobs further down the road. Another thing is most of these increase will most of the employment in these sectors are mostly short term, not the long term employment. So the part-time, a lot of part-time jobs here. So it also not pointing to a very strong consumer spending going forward. Because if you have a long-term secure employment, you're more likely to be more confident in your consumer spending. Okay, for the November durable goods orders, we just pull out the new orders for non-defense capital goods ex aircraft, excluding aircraft, because aircraft is always the one that created the big fluctuation. And in the month of November, there was quite substantial aircraft delivery. The new orders was up for this sector. 6 segment was up 0.8% month on month. It's 2 months after 2 months of decline, so this is positive. But shipments were still down 0.2% month on month. And if you look across the data series, the shipments has exceeded new orders since November 22. Not a good sign. It doesn't drive CAPEX decision. If your new orders that come through for manufacturers, the new orders that come through is lower than what you have shipping out, it just encourage you to invest in new equipment to position for future growth. So is indicating a weak signal going forward for the economy, for the US economy. On the Middle East front, the Red Sea disruption has dominated a lot of media coverage. Basically the disruption actually is led to a diversion or suspension of shipping routes through the Suez Canal. And these liners will look up to route via the Cape of Good Hope. That takes about 13 weeks of shipping time from 10 weeks. So there's additional 3 weeks of shipping time, means the capacity in the industry has actually been is reduced. So this is for a round trip Asia to Europe. So the disruption actually only affects the Asian to Europe segment. And with that, the Shanghai containerized freight index has actually doubled in the last 2 weeks. If this were to prolong, the potential impact, of course, is higher shipping rates, and then it could also divert time-sensitive cargoes to take the air to be shipped via air freight. So it helps those in the air cargo segment. They could also manufacturers could also be moved to stock up more to cushion for any supply chain disruption. And then if this really prolongs and hurts any of the really cuts any of the shipping routes, then you might see port congestions and container shortages at some ports, like what we've seen during COVID. But at the moment, this is not happening yet. Okay, so overall, the disruption will increase business costs for all manufacturers, but customers might be pushed to order more. So in short term, it could be a gain over there. So we think the near term beneficiaries will be the shipyards like Yangtze, because of the less risk of cancellation of existing orders, or the shipping lines that ply this Asia or Europe routes like Maersk, and potentially the air cargo operators. Okay. On the Singapore front, we have the URA fresh estimates for the property sector. The fourth quarter 23 non-landed property sectors was up 2.2%. For the full year, it was up 6.5% year-on-year over FY22, a smaller increase compared to FY22, the previous year. Okay, the price increase in fourth quarter, worthy to note is that it's actually mainly driven by the launches of the new properties. So the new launches were actually a higher price that actually push up the entire sector average. So it also lead us to think that because new launches at higher price, it means that there's less risk of the secondary prices in the secondary market, the decline in the prices in the secondary market. Okay. The volume wise is down 15.4% in the full of last year. Only 18,500 units were transacted for both primary and secondary market. And this is the lowest since 2016, after the ABSC increase for foreigners, as well as the higher mortgage rates. But still, the government is continue to push out a record GLS program. So expect record 100,000 new supply in 2023 to 25, which is 22% higher than the 3 years before this. So this is probably will be good for the property agents. The next slide, please. So for this week, I think the focus will be probably on the REITs. We think REITs will be, the share price will be way down in the near term by uncertainties with respect to how much will the decline in the asset value, in particular for those with foreign assets, and whether the NPI will be able sufficient for them to service their higher interest expense, and whether there's any likelihood of a cash cost for them, any need to repair the balance sheet. So but the longer term for this year, of course, REITs will likely outperform after this the market is able to ascertain where the asset value of these REITs are going to land after the revaluation, taking into account the higher interest rates. So also much will depend on the US CPI that will be announced on 11th of January to guide us on the timing of the first rate cut. Okay, so I elaborated a little bit on the shipping sector just now. We think some of the stocks have over discounted the impact of the Red Sea disruption. Biggest beneficiary is still Yangtze ship, because when freight rates were on the way down, the concern is whether there's any risk of order cancellations, as the order book is now at a very record level of 14.6 billion US dollar, and this will last them to mid-2027. There's a typo there. We are worried that when freight rates will come down, the orders might be cancelled. So now when rates are climbing again, so this risk has kind of abated somewhat. And the top 5 container liners are Yangtze ships customers. So the events to look forward to is mainly the US CPI on the 11th, and then you also have the China trade data on the 12th. Then of course the big one is the Taiwan election on this Saturday. The corporate insights, we have lined up quite a number for this month and next month. Please log in if you have time to listen directly from the company. This is all for me for this week. Maybe we can move on to the question and answers. Thank you very much. If you have questions for us, please key into the Q&A tab on below the screen, and we'll take that on the chronological order. Okay, we'll do the technicals later. I'll start with the fundamental first. This one question for Paul. I'll read it out. Okay. Hi Paul, understand that you have ceased coverage for APTT, but could you please share your quick take on the weakness in its recent share price? Thanks. Okay. I'll answer on Paul's behalf. APTT, I think the concern is on the decline in the asset value. In late December, they issued a profit and a profit guidance, which they discussed that there could be an impairment loss on the asset value due to the higher interest rates, and as well as also the weaker, stronger Sing dollar versus the NT dollar. Okay. For APTT, our view is that we don't know where the asset value will land, but definitely you will expect it NAV to come off. The EBITDA for APTT has been on a decline. They average on a 3.5% decline on compounded annual growth over the last 5 years. So this is a concern, because this decline will be taken into account when the valuers value the assets. But suffice to say that the funds from operation, we usually watch out for FFO, is about 6 cents per share. That's above the 1.05 cents DPU that they had guided for FY24. So they're still able to pay out the 1.05 cents comfortably above. They're generating cash flow comfortably above that. And you recall they had actually a purge. They had actually seen a higher churn rate in the last quarter as they clean up the data points to take out those that are inactive subscribers. So the number of subscribers has reduced. That also will affect the valuation of the asset value of their cable TV. But I think the key underlying issue with cable operators is that for them is that the demographics has changed. The younger people populations, they're not watching TV and not watching cable TV for sure. So the subscriber base you expect to be reduced. And also the other thing is another point is that the mobile operators might use the cable fiber as their data backhaul, but that again, the take up from the operators have also slowed down as the more options available on other kind of media. So I'm not sure if I've answered the question. So to sum it up is the assets is not the asset value will decline, but it's still generating sufficient cash flow to pay the 1.05%. So that gives you a very comfortable yield of I think I'm not sure what's the share price today, but is it about 11% dividend yield is quite assured. Yeah, thank you. There's another question. Hi Peggy, for shipping stock, what is your opinion on Costco shipping? Thanks. Costco doesn't have any shipping agreement actually, to be sure. They have a shipyard which they do some repair work, but mainly for their parent company, because the parent Costco ships pass by the Singapore waters. They drop by for repair or maintenance at Costco shipyard, and the Costco big part of the income comes, and the part of the assets is the Cogen logistics center out in Jurong. So the asset is there's also a potential risk that the asset value might be written down. We think there could be an impairment loss over there, even though the logistics sector is still quite promising, because in my opinion, they had really overpaid for that asset. So so if you are buying Costco on the shipping angle, then that's not worth it. But having said that, it's really at a steep discount. I think sorry, I haven't checked today to the price to book. The price to book is at let me open up my phone. Sorry, the book value is about 26 cents. 20, yeah, so it's about maybe 0.8 times. Yeah, so it's almost nearly at book value. So yeah, so I hope I answered your question. But if not, please drop another question and I do it again. Thanks. Okay. I'm hoping that somebody else if some question was somebody else. I think no. Okay, I'll do the next. No worries. Okay. I'll answer the Capital DC questions later, because I think I need to open the file on my computer. Okay. Property agency counters. I think this must be referring to APAC, Realty, and Propnex. Have you seen the bottom of the businesses, or the property market has bottomed? We feel that the for property agency, that there's the 2023 volume could have touched the lowest point. So for 24, a lot has got to be guided by the mortgage rates. So we believe that with the volume of launches coming out, especially for the HDB BTO completion for this year and next year, so it will generate a whole new cycle of transactions. Like those who get the BTO will sell their for existing assets that they own, and then those who take on the move into the new properties, new private properties, will sell their second-hand property. So that will generate a whole new flow of transactions again. So it will benefit the property agencies in that sense. But for property developers, is a bit tricky here because of so much supply coming on stream, the margins that they have all typically enjoyed in the past might not be they might not be able to see those margins again. And if they thankfully is most of them don't have much much inventory on hand. If they have inventory on hand, and these are new build, there's not that they might need to, as the buyers move on to the new launches, those properties that were launched like in 2023 might see lower demand, so they might have to adjust their expectation in terms of pricing in order to clear those stocks. So for property developers this year, it might not be that attractive compared to the property agents. Thank you. Okay, hi Peggy. Growth stocks like Riverstone, what's your view since the COVID wave is over? Okay, if you look at the property stocks like Harta Lega, who is all into nitrile gloves, they actually reported a profit in the last quarter, in the September quarter. Those who are doing latex gloves are still fairly okay, even though latex gloves are higher priced than nitrile gloves. And for Riverstone, it's really a standout because they had a clean room gloves. These clean room gloves the customers are really sticky. They don't want to they wouldn't want to change a supplier for a small price differential because the risk is too high. It's contamination in their lab, then the whole batch will cost them a lot of claims from the customers. It's not worth it. So for Riverstone, it's really a standout. It's one of its own. Is the top of the class. Yeah. But for the other glove sectors, we think we might be seeing a bottoming here. Is the natural gas prices? The gas prices are coming down in Malaysia, and we also see some closure of the plants. As I said, some lines were taken down. Of course, like the top glove, they took down, but they could also restate it very quickly. So for these glove sectors, we still think we should just buy those with some characteristics of their own, like Riverstone, or maybe even UG. They have their own brands, so they are, and they also have their own manufacturing. So if the prices of gloves rise, then they can utilize more of their own manufacturing facilities. If the price stay low, they can continue to source from third parties, because they sell it under their own brand names, which then they have in terms of customer base, they have it's more secure compared to those who just simply sell to the distributors, like Top Glove. So So in this, we think the growth sectors might have hit the bottom in the by end of 2023. It's two questions on Genting, so I take them together. Any upside for Genting Singapore this year? Is Genting steadily on the rise, or there is still possible storms ahead? For Genting, the issue is okay, they're benefiting from more travelers coming back to Singapore, especially in the opening up of the Chinese market, the 30-day visa-free travel is going to happen soon, and that will probably see a lot more traffic and coming through for the Chinese tourists. But they will have to spend a lot for the redevelopment of their resorts in Sentosa. So that will probably take up quite a and that will the capex wise will decline, will cause the free cash flow to fall. We think if you like Genting, we still think that you might as well just buy directly the Macau players, because Macau is coming from a very deep bottom. The improvement will be even sharper than Genting. Thank you. Okay, this one involves, okay, I read out the question. The return of China tourists is not happening, or at least delayed. Do you still hold a positive views on FEHT, CDL Trust and Genting? We think the Chinese tourists might begin to will come back quicker after the 30-day visa free is effective, and the fact that like our neighbors are all doing away with visa for Chinese tourists, it means that more will flow through here actually, because when they visit these countries, they also typically pass by Singapore as a route. So it will benefit us in a way, but they are also spending less. So the focus will mainly on the mid-tier hotels. So Far East and CDL definitely are the major one who will capture most of these tourists. Yeah. What's the latest with Sembcorp and its stock movement lately? This Sembcorp has been gathering renewable assets. Not much beyond that, but you notice and also some of those greenfield projects that they invested in 22 and 23 will turn operational in 2024. So there will be an increase in contribution from renewable energy going into 2024 going to 25. So that is the positive for Sembcorp. The other thing is the EMA has been very aggressive in trying to make sure that to ensure our energy security. So embark on push out is the import of renewable energy into Singapore, in which Sembcorp and Keppel are very, very actively involved. So for the energy sector, we're still very positive, and Keppel and Sembcorp are definitely the beneficiaries to enjoy this uptrend. Thank you. Then can I pass on to you for the borrowing rates while I check out on the rest? Thanks.
Okay, I'll do a bit of TA first. I'll start. Let me share my screen first. Okay, so first up, I'll talk about DBS. So I think currently it's a bit of a currently it's pulling back from this resistance level of about $33.40 to about 50 cents level. I think near term support wise, we could potentially see some support around 32.20 to 32.50 over here. So 32.50 is a recent swing low. Yeah, and then I think when the 20-day MA comes up closer to above 32 plus, then there could be some support as well. Yeah, so it's just a bit of a consolidation given the run up during the last week of 2023. And next one about BRC. Okay, BRC I think is still trending well. Yeah, so it's just trending in an uptrend over here for now. So I would expect if it does a pullback, then near term support wise likely be around 177 around there. And current resistance about 180 over there. As for Apple, yeah, so Apple I think is still slowly going up, but I would expect possibly some pullback since it's still facing a bit of resistance at around $7 from this trend line over here. So yeah, previously on the retest they will have pullback. Currently it's doing a pullback as well from this resistance area around 7. So I think near term wise there could be some pullback towards around 680s over here. And previous resistance as well, recent resistance over here could act as support. The next one will be Escort Trust. So for this, I think it started to trade outside of this rising wedge. So currently in terms of the wise, it looks a bit of soft sideways going on. So I would expect a bit of range going on for now. There's some support level around 95 cents, 96 cents area. So I expect that to hold for now and just trade range. Yeah. Then resistance is about $1 over there. And for CDL Hospitality Trust, it's also a bit of a range for now, but still in an uptrend over here when you look at this portion. It's just slowly trending upwards. So for now, yeah, it's a bit of range. Support, I would expect it to come around 106, 107, this level. We have this trend line support, uptrend line support, as well as the recent range lows over here. Also, this was a recent resistance break as well. Okay, then for Wilmar, I think it looks like there's still possibly some weakness for now. Okay, so after the breakdown of this level around 360, we did a retest. It was a retest and then a pullback towards 350 over here, this resistance breakout. So for now, it could be some range going on if this level holds. If it doesn't, then we could go lower towards like 340, the next support level here. And in terms of the longer term trend, we are still in this downtrend trend over here for Wilmar. Okay, then next one is Mapletree Logistics Trust. I think for this currently we are seeing it's possibly trading outside of this rising wedge pattern over here, and also possibly just some pullback since it was a break below this 170 level, it was a resistance breakout, and then over here we saw the selling took the price below 170. So possibly you could see a little bit of consolidation. Maybe retest of the support around the 164, 165 level over here, the recent swing lows. As for SIA, okay, as for SIA currently looks like it's trading outside of this rising wedge pattern. So for now, if it continues a bit of a pullback, I think so we could see price retest towards like 627 or 633, this area over here first, then possibly some consolidation. Okay, next one, Manulife REIT. Okay, for this, it has it has started to form a bit of a range recently. Price is holding 0.075, this resistance turn support level. You also have this uptrend support line over here. So I think this is a key support level to hold if the price is to maintain this range to about 0.075 to about 0.083. If it can't hold on, then we potentially could see some lower levels. If it doesn't hold this key support. Next one is Rex International. Okay, for Rex, I think it's a bit of a range. Currently, there's some resistance around 2.189 this level, which will coincide with this swing high from mid-October of last year. And potentially just trading this ascending broadening wedge pattern. In terms of the near-term support-wise, it could be some support close to about 0.182, 0.183 over here, these recent lows, as well as this trend line over here. So possibly just some consolidation first, seems. Okay, for Meituan. Okay, Meituan, I think still trading in this downtrend channel currently. So, and then today we broke below this. It looks like it came below this spot of 76.20. So I think if it continues the trade, this channel potentially could see some downside towards 70 as the next support level for Meituan. Okay, for Samudra Shipping. Okay, currently I think it's in this currently trading in this resistance area. So previously, back in August to about September of last year, there's a retrading range over here between 73 cents to about 76 cents. Yeah, so I will expect some resistance to act over this area, possibly some consolidation first. Yeah, following the breakout on Friday. And for Franken, I think currently possibly is pulling back since from this uptrend channel resistance, which is trading in this uptrend channel, but around 134 over here, price started to pull back a little bit. So near term, there's a first support level around 126 previous swing high level. So potentially you could see some short-term support coming in, could do a bit of consolidation. And the next lower support, if you're aiming at the lower end of the channel, will be closer to about 190, 120 level. Okay, for Valuetronics, I think is trending up pretty well. It's trading nicely in this uptrend channel over here. Yeah, so I think that probably continue for now. There's in terms of resistance wise, the first level is around 62 cents. Previous support breakdown 2020. The next key resistance could be around 65 cents. Yeah, for Valuetronics. Okay, next one is UMS. UMS, I think, is possibly consolidating in this ascending triangle over here. So some resistance around 132, 133 level. For now, it's pulled back to one support level is around 128, 129 over here, the recent lows. Yeah, so there could be some support coming in. If it does go lower, then next support level will be around 125, 126 possibly. Any comment on the price movement of Capital DC? Okay, for DC, I think there was a breakdown of this uptrend channel over here. Then there was a retest, and currently it's pulling back again. So I think for people DC, there could be some further pullback. We can't, to test this the support around 177 over here. Given it's currently momentum is the downwards over here. Okay, what's latest with Semco and stock price movement? Okay, just take a look at the chart. Okay, for Semco Industries currently, I think it's trying to hold above this 525 key resistance. So previously it acted as a resistance until recently there's a push above and then a retest. So if it can hold this level as long as possibly this trend line support, then I think possibly the price could go higher towards the next key resistance around the 560s, around the 560 area. Okay, TA for sets. Okay, for sets, I think recently it has been consolidating a bit of a range over here, but I think there could be some potential upside going ahead since the recent price action there was a pullback from this 278 swing high, and then the found support from the recent resistance 272, and then price moved back up today. So I think there could be some retest of this 283 swing high level if it continues the momentum upwards, and then next resistance will be around 280, 287 for sets. Okay, next one is CLI, Capital Land Invest. Okay, I think for this, was unable to hold the back test of this trend line break over here. So I think currently there could be a bit of a range going. Yeah, so support wise will be around 290s over here, the swing lows over here. So maybe price will come back a bit lower to a bit of a range. Okay, for CICT, I think it's still trading in this uptrend channel over here. Recently, price pulled back from it's about 207. This it was a horizontal swing high resistance in the past, and then also coincided with this uptrend channel resistance. So currently pulling back to the recent horizontal resistance now, I think it's support around $2. So potentially some consolidation here first. Yeah, also could be doing a retest of this channel support as well. So yeah, maybe some range trade for now. Okay, next up is Prime US REIT. Okay, so for Prime, currently is pulling back. I think potentially I think the price could try to do some retest of the breakout around the 20-cent mark. So yeah, this was a previous strong resistance area. So over here there could be some support if price comes in, and maybe it's just a bit of a consolidation. The next one is Daiwa House Logistics Trust. It's currently trading in this uptrend channel over here. Yeah, so I think it's still possibly trading upwards given a breakout of this 65 cents level recently. Next key resistance to watch is probably around 68 cents, the swing high over here. and then also around 70 cents was also a previous. It was also a previous support, then turn resistance over here. So this is the next resistance area to watch out for diamond. The next one is REIT Global. Okay, for REIT, I think it's also trading in this in the uptrend channel currently. So in terms of near-term resistance wise, there's some resistance from about 42.5 cents to about 44 cents area next. So, yeah, but for now it could be trying to go higher in this channel before it could sideways for a while at the resistance levels. Okay, then some US counters. Let me see, AMD. Okay, AMD, I think currently it's quite near this uptrend support line over here, which is around like $135. Also, this swing low support. And there could be some support coming in. There was already some bounce last week. Next support zone lower, next support level lower around 131 out there. Then there could be some short-term resistance around the 140s level above. Yeah, so it looks like it's a short-term pullback to test this uptrend support line. And for NVIDIA, yeah, NVIDIA looks like short-term range, possibly range trading if it does hold the 475 level, since this is a support and resistance and support level again. So there could be some range bound trading going on if it holds the 475 level. Okay, the next one is Palantir. Okay, Palantir I think is still pulling back in this downtrend channel over here. So, and then price recently broke below this $17 key support. And with this price gap over here, I think potentially price could go a bit lower first. Then try to test like the support area of about close to $15. And next one is around the next strong support will be around 1370, which is respected quite a few times in the past. Yeah, so it's just still trending downwards currently. And let's see whether it comes to we test these swing lows and fill out the price gap over here for some support. Okay, next one is Google. Okay, so for this, I think looks like it failed to hold this 138 level upon the retest. So potential price could come down a bit lower towards 133, 134. This breakout level over here, as well as this trendline support over here. Next one is Hong Kong Land. Okay, for Hong Kong Land, I think some positives will be that breakout of this downtrend resistance line, and also is holding above this 340 resistance level, this key resistance level. So if it's able to stand above it, I think the price could trade higher, given that it's currently trading is this uptrend channel formation as well. So next resistance possibly is around this swing high about 356, as well as the swing highs over here around 360s. Okay, the next one, Jardine Matheson. Okay, so for Jardine Matheson, looks like it's still bound by this range over here, which is around 3860 to about 4180 over here. Today price open at this level, this swing high level, and then there was a bit of a sell down. So yeah, it looks like we're seeing some more consolidation first for Jardine Matheson. Okay, then next one is DFI. Okay, DFI looks like it's doing a bit of a range trading currently. So it's just trading this range between like 214 to about 244. So I will expect that to currently continue for now. Next one is SMI. Not sure whether you're referring to this SMI or not. Yeah, because sorry, if it maybe you can clarify if it's the discounter or something else, because the chart looks a bit different. Okay, I'll talk about Apple first. Okay, Apple, I think currently there was a strong pullback. Last week we booked below this support level at 180 with a gap down, with price moving downwards. But I would think that some short-term support could be coming soon. So since we are quite near this 178, 179, this previous horizontal resistance level, could be doing a bit of a retest over here. And this is also the 61.8% Fibonacci retracement level. We take the wave from the end of October to the highs over here. So yeah, there could be some short-term support coming in at this horizontal level at 178, 179 potentially. Okay, SMI value. Okay, thanks. Okay, I think for this it's a bit of a range going on. There's some resistance 0.041, it's low support 0.036. So yeah, potentially a bit of a consolidation first for the looks like for this counter. For M. Okay, I think for this counter, it's quite a range bound counter. So I pull back from 52.5 cents resistance. Currently retest is near the support level of 50 cents over here. And so there could be some support coming in again. If not, the next lower level will be closer to about 48.5 cents about there. So in general, quite a range throughout the whole of last year. Okay, some crypto counters. Marathon Digital. Okay, so I think for this there was a pullback last week after hitting this trend line resistance over here. Then price currently pulling back, kind of respecting this short-term downtrend resistance line. So I will expect a bit of a consolidation first as it comes down a bit. Then some support levels will be around $19 to about $20 over here. If it does retest this horizontal resistance previously, as well as the recent swing low over here. Okay, then for Riot, Riot recently retested a swing low support around here, around the 1380 level, the bounce, and then some resistance from $16 over there still. So maybe a bit of a consolidation first in the range. Yeah. The next one is Bit Digital. So I think for this counter, yeah, looks like a double top at around $5, and there was a pullback. Okay, then yeah, currently there's some support coming in around the 350 level. This was the horizontal resistance before the breakout over here. So they have retest. So there could be a bit of consolidation coming in these levels. Then if there's a lower support, the lower support level will be around 310 over here. Yeah, which will probably coincide with this trend line over here. Okay, then next one is JD.com. Okay, for JD, I would think that currently in possibly trading a bit of a range recently, so pull back from the resistance, the swing high resistance around 112 to 113, and currently I think could pull back towards the swing low support about 97, 98. Yeah. And for Alibaba, okay, Alibaba also looks like a bit of a range trading for now, pull back from resistance $76. First support level will be around $69, $70. This range breakout level over here. Then if it hold, then we'll probably retest the 67 lows again. For BYD, I would think that still having resistance around 215, 216, this previous horizontal support. Now I think it's resistance. Then yeah. So let's say you respect this trend line currently at 203. If it does, then there could be some bounce, but I would think that not much since 208, 209, there's some shorter resistance. Yeah. If it can't hold this level, then likely I would think that price will come back to the lows again around 197, 198. And we do a bit of a range formation. 8K7, that's UG Healthcare. Yeah, so usually I think it's a bit similar pattern to MedX. Yeah, if things the bearish reversal, then bearish pattern, potentially price could go a bit lower. Yeah, currently it's about around the 20-day moving average. The next one is TSM. Okay, TSM, I think Currently, pulling back still from the retest of this, from retest of $105. Okay, then there's one support level at this level 100. Yeah, it's a retest, and then price looks like still able to see whether it can hold this level or not. Yeah, so potentially if there's some continued weakness, we might see price go on a little bit lower towards like this next key swing low support around the 96 level. Okay, then next one by 2. It's a bit of a range. I think a bit of range going on currently. So a good thing, previous resistance acting as support 111, some resistance still around 118, 119. So for it to go upwards, it needs to break above this level, then possibly a retest of the highs near 126 over here for by 2. And so I think that's all for the TA questions. Now I'll pass back my time to my colleagues if there are other questions we answered in the Q&A. Thank you.
Hey, thanks, Zane. I think I'll take this one question. Not very sure if it's really banking, but what is the outlook for Singapore borrowing rates considering Fed cut rates this year? I'm guessing you're referring to like the loan rates, right? This is really quite dependent on the what kind of loan you take with the bank, right? So if you're taking a floating fixed interest rate loan, then it's also very dependent on what the bank wants to give you. But highly likely, regardless if it's a floating rate loan, then it will definitely follow the interest rates. So I mean, even for both, when we have if there's a Fed rate cut, then Singapore interest rates will likely follow the Fed rates, and this will definitely be lower loan rates for Singapore as well. Yeah, but I think there'll be a bit of a lag, so we won't really see it. That I don't think the banks will be it'll be that quick to lower the loan rates as compared to how fast the interest rates go down. Unless of course you are in a floating rate loan, then it's just pegged to the interest rate. So if it goes down, it goes down. If it goes up, it goes up. Yeah. But fixed rate loans, I think you might need to wait a while. Okay, I think that I'll pass it to the rest of my colleagues for the rest of the questions. Thanks.
Thank you, Glenn. I'll take the capital DC question. For KDC, LOD was issued. What's next? Risk and possible solution. And yeah, so on 15th December, Capital DC announced it has issued a letter of demand to Guangdong Data Development. The tenant stopped paying rent on 15th September. And the security deposit was drawn down while the management and the tenant was negotiating an installment payment. The tenant paid on October 2-3, but missed the November and December installment. Yeah, so KDC is unable to recover the 4.5 months of the rental and coupon outstanding in FY23. And the management guided that DPU would be 0.655 cents lower and translate into around like 6% of the dividend yield. Any possible solution in the near term is still very unclear. KDC can terminate the forward purchase agreement of Guangdong Data Center 3 if it is not handed over by the end of October 23. And receive a refund of 100 million RMB. Management has no intention to extend the long stop date, and also send its own technical expert to assess the status of the construction of Data Center 3. Data Center 1 and 2 is has committed occupancy around like 60 to 80%. and 30% respectively, and they has leased to the Chinese telco. It's still like very unclear whether it would be possible for KTC to take over and manage themselves and lease out directly. Yeah, Peggy, please add on if I miss anything. And compare with Far East Hospitality Trust, seems like Class has been slow in its recovery. Any comparable reasons? So Far East is probably Singapore, where Class is a very diversified portfolio, covers Europe, US, and Asia. The slowing down is in its recent performance may be due to the potential risk of year-end valuation, but gearing forecasts remain very healthy at 35.2%. In our view, the valuation adjustment in the year-end is very manageable. RevPAR and ADR in Singapore is growing at a much stronger pace. ADR is more than 100 and reaches 105% of the pre-pandemic level for Far East Hospitality Trust, and Class is around like 102% of the pre-pandemic level. The occupancy for Far East Hospitality Trust is still lag behind, around like 80 to 90% of the pre-COVID level. So we see some like more potential for the RevPAR growth in the coming year. Primarily due to the 30 days visa-free for the Chinese, and also a line of MICE events in FY24. Yeah, that's all for me. I'll hand over back to Peggy. Thank you.
Thanks, Miu Miu. So the Keppel DC did highlighted that the impact on the DPU is about 6.2% decline if they lose this customer completely. Potentially, of course, that will also affect their year-end valuation of their assets if it will be taken into account the absence of income from this space. Yeah. So let me take on the rest. The two more questions here. MM2 rights issue positive for the company. Should apply the rights. Okay. The key about MM2 is is that they really need the money. I'm sorry, it's a redundant statement. But they have been going through a few rounds of fundraising, trying to repair the balance sheet. So this rights issue is called just in time so that they are able to that they don't maybe so that they couldn't get into a negative equity situation. But there's still the warrants and the bonds that's out there that could be exercised, and the bonds exercise conversion price is now lowered to 5 cents. So potentially there's always a cap on the share price, how much the share price can go up. The other thing is Melvin is really very, very critical in the company. If he's not in there, I don't see how the company can run. So Melvin's stake has been diluted over the time over the course of the years, but the good part is that he's taking up all his rights entitlement. But even then, we probably will see his stakes eroded over the years. That is for the shareholders' perspective. The other thing is that the business that they are doing, shooting films, shooting movies, and so on, may have to take on a new model. The way that they have been doing is to invite investors into them to participate in their projects, or they also invest in projects that's done by other investors. I think longer term, this might have to evolve to reduce the risk in terms of revenue generation, in terms of stability of the company. So unless that change, the revenue line is still continues to subject to quite a higher level of risk. And the other thing is the cinema operation is really the one, after since they bought it, is the one that has been dragging them down. And cinema is really one asset that's not really an asset, because you can close the cinema, or it's actually really belongs to the mall. If the mall thinks that they don't need a cinema, then you got to close your business. So it's really not a very resilient business to be in. Like for instance, the cinemas that they had in Malaysia is almost are really almost all gone. So just sum it up is it's not a business that that that's proved resilient enough for investors to want to take a long-term view on. But for short term, if you can, you might want to renounce your rights. You still can get back some money there. Or but we think the upside to the share price could be limited unless you see we see some changes, transformation in the company in terms of the business that they do, or the way they do it. And having the key shareholder stakes are eroding over the years. It's just painful to see. Yeah. Sorry, that's my personal view. After following the company all these years. Yeah. So, but at the rights issue price of 2 cents, the current price 2.8 cents. So there's some 2.7 cents. So you could say there's some margin for existing shareholders. But for me, I will probably renounce my rights. Thank you. The next question is, what's your take on Hong Kong land and future dividend payments? Let's say Hong Kong land, as much as we try, it's really difficult to get hold of the management. So our views is really built from the macro angle, from the outside looking in. So what do we, from the different assets that they have, the Singapore ones appear to be the one holding them up well, the development and the property development, as well as even the commercial buildings. But we are concerned on their exposure in Hong Kong, especially on the office sector, which we been hearing very low take-ups in the rental. The rental rates has been on a negative reversion cycle. So the trend doesn't seems to overall doesn't seem to work in their favor. They produced third quarter updates. They mentioned that the underlying profit for 23 will be moderately lower than 22. Underlying means they don't include any impairment loss on their assets, which we think this might feature very might be a significant in for FY for 2023. So that might bring the value of the net equity down for the group. So whether they can sustain dividend is a very big question mark. I don't have an answer to that one, because a lot again depends on how much is the net profit line for them for FY23. So yeah, sorry, it's not very helpful. If we manage to get the meeting with the management, more detailed discussion with them, we'll write out a note and we'll do a video on the ground for you. Yeah, thanks. Okay, I think we have covered all the questions here. I can see. Yeah. I just confirm again. Okay, there's one question on Capital DC, but I think Mel has answered that one. What's the risk going forward? The risk is potentially they will lose this tenant, and then there's probably a 6.2% impact on their DPU. I think that's all we have for today. Yeah, thank you very much, everyone, for your very, very good questions. We appreciate your presence. We hope you have a good week ahead. And please join us again next week for our session, and Paul will be back then. Yeah. Thanks again. Have a good day. Thank you. Bye-bye.